Hello everyone, welcome to session 4 of SCMPE revision. We need to start from theory of constraint concept in this session. Let us begin. Theory of constraint, optimized production technology, OPT. First of all, what is theory of constraint? Here you have the basic concept and then we can come back to optimized production technology. TA, theory of constraint or throughput accounting. We will discuss both in some time. TA concept assumes that firm has given set of resources available, building, capital, equipments, labor force, etc. The operating cost of these resources, labor and overhead, are considered as fixed cost. One of the basic point that we should all know in theory of constraint and throughput accounting, that we consider labor and overhead as fixed costs. Only material is converted to FG. So whatever you spend other than material is considered to be fixed cost. See this, using these resources. Resources means building, capital, equipments, labor force. Purchased materials and components should be processed to generate sales revenue. That means you convert RM to FG using these resources. The firm has to maximize throughput contribution. What is throughput contribution? Sales minus direct material cost. Now, in CVP analysis, we know that contribution is equal to sales minus variable cost. Throughput contribution is sales minus only direct material cost, because they believe everything other than material, which is nothing but basically labor and overhead, they believe that these are fixed in nature. So when they are fixed in nature, even if you write sales minus variable cost, it is only sales minus material cost, subject to production capacity and sales demand constraint. Normally, a business has two major constraints. One, they are not able to produce. Number two, they're able to produce, but they're not able to sell. I'll give you two examples. One company with the capacity that they have, they can produce 10,000 units, but they can sell only 6,000 units. Now, because they are not able to sell, they will not produce. So for them, the constraint is sales demand constraint. But many companies have another problem. There is a demand for 25,000 units, but they are in a position to produce only 10 or 12,000 units. You have a shortage. In CVP analysis topic, we call this as key factor. And we calculate contribution per key factor. We rank the products based on contribution per key factor. And then all our production decision will be based, and the resource allocation will be based on contribution per key factor and the ranking that is followed by that. Yeah. So same concept is followed here also. When you are revising, make a note somewhere. When you are revising key factor concept in CVP analysis topic, that time itself, you should revise even theory of constraint. Or if you're starting from theory of constraint, first, when you are doing theory of constraint, go to CVP analysis, complete the key factor concept and all the related problems together, because there is 90% similarity. There it is sales minus variable cost. Here it is sales minus material cost. There you call it as contribution. Here it is throughput contribution. Correct? So you'll be able to understand and do it faster if you do it together. I hope you have made a note. If you are doing CVP analysis first, along with key factor, complete this topic. Or if you're starting from theory of constraint first, then go to that topic, that concept only, complete it and then come back. Now come back here. What is optimized production technology? Profits are expanded by increasing the throughput of the plant. That is rate at which RM is turned into sales. Throughput contribution is sales minus material cost. The OPT approach determines what prevents throughput being higher by distinguishing between bottleneck and non-bottleneck resources. Now, non-bottleneck resource is very easy to understand, where I don't have a shortage. I have enough supply, abundant supply. Even if there is additional requirement, sudden requirement, I can get it from outside. This is called non-bottleneck resource. That means now you know what is bottleneck resource. Yeah, the explanation is given here. By the way, in this topic, we use these three terms: Number one, throughput. Number two, investment. Number three, operating expenses. This entire chapter revolves around only these three. Throughput, that is throughput contribution. Investment, that is your capital employed in the business. Operating expenses, that is day-to-day expenses, which is labor and overhead, which they believe as fixed in nature. What is bottleneck? Activity within the firm where the demand for the resource is more than its capacity to supply. Suppose I need 10,000 labor hours. This is the need, this is the requirement, but I have only 8,000 labor hours. Now this becomes a bottleneck. What is constraint? It's a situational factor which makes the achievement of the objective more difficult than normal. Now you have labor, but you're not able to generate because of other problems. There is a power supply shortage. There is a raw material supply problem. There is a sudden machine breakdown. Understand? Read. Situational factor which makes the achievement of objective more difficult than normal. Normally in a day we can produce 500 units, but today we are not able to do because there is a repeated power distribution problem. Though we have a backup is also not working for some reason. Now that becomes a problem. Is it a permanent problem? No, it is a situational factor. Read the line 2-3 times. You will be able to understand the difference between bottleneck and constraint. It clearly says, number one, it's a situational factor. That means it is not a permanent problem. Number two, it makes the achievement of objective. What is the achievement of objective? You have to produce more, sell more, earn more profits, contribution. It makes it more difficult than normal. That means normally you are able to achieve it, but today because of a situational factor, I am not able to do it because there is sudden demand. And the same day when I have demand, my key employees, important resources are on leave. My machines have stopped working suddenly. The repair guy is not picking my phone call. Power supply issue, as I told you. My material is on the way, stuck for some reason. I'm waiting for material. Everything else is ready. This is a situational factor. This is not a permanent problem. Yes. Key steps in managing the bottlenecks. Identify system bottlenecks. Highest TA ratio, throughput accounting ratio, resource requirement by resource availability. That is, as I've written here, 10,000 is the resource requirement divided by 8,000 resource availability into 100. Normally, you have it in percentage. Describe how to exploit the bottlenecks, subordinate decision, bottleneck removal, remove the bottleneck, increase the bottleneck efficiency and capacity. Now, in some cases, we have done these kind of problems in the class also. You may have more than one bottleneck. In that case, you work out the percentage for both. Shortage of labor supply, shortage of machine hours. Work out for both. Whichever is higher, you take all your decision based on the higher percentage. Suppose there is a 120% problem, there is 105% problem. That means this 120% problem should be addressed first. Performance evaluation, TA ratio is equal to, mark this important. Mark this important. We have done problems on this in the class. You can refer to those after watching this video. Formula is important. Throughput contribution per minute divided by factory cost per minute. Now here, textbook says per minute. I'm sorry, we can even work it on per hour basis. But because in the study material also they have done everything on minute basis, better to do even in exam on minute basis. Throughput contribution, suppose 600 rupee divided by 60 minutes. So now you know 10 rupee to be divided by factory cost per minute. If TA ratio is greater than 1, then the product is profitable. Obviously, because your numerator should be higher than the denominator. If it is greater than 1, that means your contribution is more than factory cost. Obviously, it's a good product to produce. That means contribution exceeds operating cost. That is when numerator should be big, denominator should be small. Then only you get more than 1 as the answer. Throughput to labor cost, throughput contribution by labor cost, throughput to material, throughput by material cost. Even if you don't mug up these two formulas, it's okay. But then the first one, throughput contribution per minute divided by factory cost, and this resource requirement divided by resource availability into 100. These two are important. And again, I'm repeating this point. If in a question you have more than one bottlenecks, then you work out this percentage for both bottlenecks. Wherever you have the higher percentage, all your decision will be based on that. There are a couple of problems on this concept we have done even in the class. It's there even in the study material. Yes. Merits and demerits. If they ask theory question, you can cover these areas, merits and demerits. Merit, number one, better resource utilization, better customer relationship and service, reduction in investment, efficient usage of machine time, planned maintenance of machinery, and so on. By the way, I have received one doubt from one of the CA final students. The question is, sir, some of the theory, there are 8 points. In exam, how much to write? Is it okay if I write 4? Should I write 6? Should I write 8? Or if I have 1 or 2 more points to write, which is not printed in the book, how many should I write? Now that totally depends on the marks. If you see May 2022 question paper, some of the questions which look very small have been asked for 10 marks also. And case study type of question, they ask for 20 marks. Sometimes students are not able to write so much because it's a 20 marks question. You have to write so much, but students are not able to write. One thing, keep this as a basic thumb rule. Any sum, any question, not sum, any question where you think that there is little more weightage to theoretical answer than the calculation, like case study questions, ensure you keep minimum 1:1 as the ratio for marks and points. If question is for 5 marks, then you have to write minimum 5 points. Here itself, for example, merits and demerits. There are so many, A, B, C, D up to I think about 8-9 points. What if they ask you merits and demerits both for just 4 marks? Now you can't write so much, it will be a waste of time. So keep 1:1 as the minimum ratio. If they are giving you 5 marks, then you have to write minimum 5 points. If you think one more point can be written, a further explanation or giving an example, do that. So minimum, I'm saying 1:1. If you do 1 more or 2 more, there is no problem. So 6 marks question, 7 to 8 points is okay. Exactly 6 is also okay. But my worry is, I normally say 1:1, but I'm now saying from a couple of months, I've started saying write more than 1:1 ratio. Because when I say 1:1 for 5 marks, you'll write only 5 points. And what if one of the 5 points that you have written is not a very valid answer? 4 are very appealing, very good points, but 5th one is not so good. Validator may just give 4 marks. But if you write 6 or 7, even if 1 point is average, you will somehow make it up with other 1 or 2 points. As a whole, the answer will look good, worth for 4.5 to 5 marks. So the risk of writing 1:1 is, what if one of the points is not so good? You may lose marks there. So keep minimum as 1:1, little extra is okay. So sometimes in some books, study material, if you see some case study answers, they would have printed 4.5 page, 4.5, 5 page of answer. If you write, it will be 7 pages easily in your notebook, in your style. But then should I write so much? Will I write so much? That completely depends on the marks allotted. If you see the first question, the 20 marks question, and please make a note somewhere, at least first question of last 5-6 attempts, please go through one day before exam, not for the sake of question and answer, but just to understand how to analyze a big question, the case study question, and how to explain the solution, explain the answer. Because students always have this problem. When it is a practical sum, they know, okay, this question is for 8 marks. This is step 1, step 2, my working note 1, 2, 3, and then the main answer. I know if I do it correctly, I'll get the marks. Say standard costing, estimated profit, actual profit, calculation of all variances, and reconciliation of profit. So when students read the question, they know clearly that I have to do material variance, labor variance, overhead variance, sales variance. Estimated profit is already given, or standard profit already given. Actual profit I'll find out, and then standard to actual plus minus I have to do the reconciliation. They know clearly from beginning till the end what to do. Now 10 marks, if they work out exactly as they have planned, they'll get 10 out of 10. The problem with theory questions is when there is a question for 5 marks, they don't have all 5 points in their mind. They just know 1 or 2 and they start writing, hoping that by the time I complete second bullet point, I will get the third bullet point or fourth. It will come on the way. This is the assumption many times. Because it is theory, it gives us that extra confidence also. Let me start the answer. It will come on the way. That is not easy. Okay, we may say it will come on the way. Most of the times it will not come on the way. Therefore, When you start itself, okay, this is a 5 marks question. In your mind, draft 5 bullet points. Do I have at least 1:1? If not, then don't start the answer. See if there is any other question that you can. Okay. Suppose there is sub question 1, 2, 3, 4. 20 marks in total, 5, 5, 5, 5. Okay, 4 questions. Now, first question, you wrote 5, 6 points, perfect answer. Second, you know only 1 or 2. Third and fourth also, you know how to do. Then, first you have written 6 points. Second, you write only 2 and then keep enough space to write other 3, 4. Then go to third sub question answer, fourth sub question answer. Maybe while writing third or fourth sub question answer, you may get some point, or maybe later in the question paper, there is something connected to this, you can come back and write. So ensure that minimum 1:1 ratio is maintained. I'll be happy if you can go little above 1:1 for 5 marks, 6 points, 6 marks, 7 points, 8 marks, 10 points, something like this. Okay. So when I read, there may be too many points, you write based on the mark. So one thing you should do one day before exam, last 5 question papers, first question, which is for 20 marks, see what is the question and how they have presented the answer. And this you also have to keep in mind when you are in exam hall. 20 marks question, I can take time. Some students are unnecessarily in a hurry. I have told this in the regular class. Let me repeat it once again. You have 180 minutes, 3 hours time, and you have 100 marks paper. So 100 marks, 180 minutes, it is 1:1.8 ratio. Or for ease of discussion, say 1:2 ratio, little less than that. So if there is a 10 marks question, you can take 18 minutes, 18 to 20 minutes roughly. That means for a first case study question of 20 marks, which is definitely quite big, for 20 marks, when they're asking, if you take 20 into 1.8 or 20 into 2 roughly, 35 to 40 minutes also, that's okay. Don't be in a hurry to complete the theory answers. And nowadays students have this complaint also that in costing they're asking good amount of theory questions. It's not only practical sum solving. It's good if they're asking a lot more case study type of question. It will actually save your time. You know the problem in FR and SFM, there are so many problems and we do not have enough time. Here that will not happen because of theory question and case study questions. The time will get balanced out. Don't worry. Keep 1:2 ratio, 20 marks, maximum 35 to 40 minutes. And if you are writing a case study answer, theory answer, you will not require 35 to 40 minutes in exam. But don't be in a hurry. You can take 25, 30 at least comfortably. If you take 35 also, you know in your mind 1:2 ratio is what you'll have to maintain. So all these kind of questions, you may have many points in mind, write only based on the marks that they have allotted. Yeah. Next, some of the demerits. TOC or TA, same as marginal costing with new terminology. That means as such, this concept is not serving any new purpose. It is the same thing that we have studied in key factor. TOC aims merely increasing throughput, leading to quality compromise and higher cost of quality. Whenever you say we should produce more, we should produce faster, we should increase contribution by reducing the cost, you're not talking about the quality at all. So when you try to, and here everything is calculated per minute, that means now employees will be given a target to produce more in 1 hour because every minute matters to you. Now when they try this, they may go very fast, and if they go very fast, there may be too many internal failures or later external failures. To gain managerial attention, a resource should become a bottleneck. That means if something is not a bottleneck, you will not use this topic at all. Understand, this topic is entirely based on one fundamental point, that there is a shortage, the bottleneck. That means if there is no bottleneck, you will never worry about those resources. For example, labor, 8,000 hours you need, 8,200 hours you have. That means you'll never worry about improving the output of labor because you have surplus. The day you need 8,500 and you have only 8,200, suddenly you want to do something. That means a non-bottleneck resource, even if it is underutilized, management will not show interest at all. It will not attract their attention because it's not a bottleneck. So they will worry about utilizing a resource only when there is a shortage, and that is too late. Next, TOC advocated push strategy to increase throughput rather than pull strategy. TOC aims to achieve only short-term goals. right? Synchronous manufacturing principles. This is not so popular, not asked also in exam. Okay, just a simple concept. I think you can read it by yourself. Do not focus on balance idle capacity, focus on synchronizing production flow. What happens? We have done these questions in class. There is a labor shortage and there is a machine shortage. Labor are also shortage, machine are also shortage. Now you found out the percentage. Labor shortage percentage was 125%. That means the demand for that resource was 125% of the supply, whereas machine was only 105%. Now we will focus on 125% because that is more important than the other. Then all your decision will be based on that. Now by the time you allot all your resources based on 125%, that is labor shortage, you may end up having some machine unused capacity. We have done one very good problem like this in the class. Yeah, you're trying to make good use of a bottleneck resource and there is another resource which is getting underutilized. And what this principle says, even if there is some idle capacity of another resource, don't worry, as long as you are using maximum, you're making the maximum use of the shortage resource, that is the bottleneck resource. Other things are easy, you can just go through. I don't think this needs an explanation, not so important also from exam perspective. Yeah, so let me move on. There are some important things to discuss. Yes, target costing and cost reduction aspects. This topic, make a note, both practical questions and theory is equally important. The other topics that I discussed so far were more helpful for case study type and more helpful for theoretical type questions. But this one is more important from both practical and theory. They can ask a lot of practical questions on this as well. First, what are the steps in target costing? Identify the market requirements and product qualities. Set the target price, that is customers' willingness to pay. Here is an important lesson first. The traditional costing, the price is fixed based on our cost plus our target profit. Our cost means company's cost plus company's target profit. But then the strategic cost management focuses more in the reverse order. First, to find out how much is the customer's willingness to pay. Now here you observe, unlike what we studied in the traditional costing, that is our CA intermediate costing, you will not fix the price based on your cost plus your target profit. You will first identify what is the amount that customers are ready to pay. And from there, you will calculate. See this, set target production and sales volume, establish the target profit margin for each product, and then you set the target cost. That means if people are ready to pay 10 rupees for your product and you want to achieve 1 rupee profit, that means your target cost is 9. It is not 9 plus 1 is equal to 10. Understand, it is 10 minus 1 is equal to 9. So the basic difference between traditional costing and strategic costing is that in strategic costing, everything is customer driven, everything is market driven, everything is controlled in today's world by outside factors than inside factor. Inside factor is how you do your cost control, but then the price can't be decided by you. What we studied in traditional costing, only in monopoly it happens that you can increase the price as and when you want. But now the problem is other way around. Forget increasing the price. You can't even decide your price. Your price is decided by your competitors. If everyone is selling the product at 10 rupee, you can't sell it at 15 or 20 unless you have such a big quality differentiation. We will study this little later in this video. Unless you have such a big quality differentiation, you will not be able to sell anything at a higher price. That means, understand here, first, it is customer driven and market driven. People are ready to pay 10 and I want to make 1 rupee profit. That means my target cost is just 9 rupee. See this, target cost is equal to target selling price minus profit margin. Determine current cost of producing the new product. So 9 is where you have to stop if you want to sell at 10 and make a profit of 1 rupee. Now you compare how much you are spending as of now. Now here comes the challenge. 9 is your target cost, and actually you believe that you will end up spending 9.5 based on your estimated cost. See this, set the cost reduction target in order to reduce the current cost to target cost. That means now you have to come up with some ideas to bring 9.5 down to 9. That means 50 paise per unit cost reduction is what you should try. Now, if you are talking about 10 lakh units per annum, 10 lakh into 50 paise, 5 lakh rupee of cost reduction is what you need to try and achieve. Analyze cost reduction target into various components and identify cost reduction opportunities in VE, value engineering, and value analysis for direct cost, and activity-based costing for indirect cost. We will study value engineering and value analysis a little later. Achieve cost reduction and target profit by effective implementation of cost reduction strategies. Focus on further possibility of cost reduction and quality, that is continuous improvement. Cost, by the way, focus on further possibility of cost reduction. It's not quality reduction, it's better quality at reduced cost. That is continuous improvement. Understand one thing, there is a basic difference between cost control and cost reduction. Many students write the term as and when, however they want. That is not correct. Cost control, as the name itself tells you, it has a visible end. If I say, suppose a new employee has joined my factory today. If I tell him that, look, boss, this work is to be done within 5 hours. All the employees in our factory are completing this task in 5 hours. You should also complete in 5 hours. If you exceed 5 hours, then I'll come and talk to you. Yeah, be careful. Within 5 hours, you have to complete this task. That means this is a cost control practice. You don't want him to cross 5 hours. That means when he is working at 4.9 hours, 4.8 hours, you will never talk to him. The day he crosses 5 hours, you will come and ask, why are we spending extra time? This is cost control. As long as he is within the limit of 5 hours, no discussion necessary. But in cost reduction, there is a focus on continuous improvement. You will tell him, boss, normally we take 5 hours. You try to complete in less than that time. Okay, he completed in 4.9 hours. Then you will go and ask, okay, yesterday you did in 4.9 hours. Today, can you try and do it in 4.8? If he does it, then you will ask him to do 4.7. This is called continuous improvement. Even when you are well within the target, there is still an improvement that is expected from you. This is called cost reduction. Cost control focuses more on past and present. All our employees have been producing this within 5 years. You should also complete it within 5 years. This is cost control philosophy. Cost reduction is, you won't tell him 4.9, 4.8, 4.7. I'll expect better and better and better from you. There is no visible end. I just want you to progress, improve the speed. That means it is about present and future. As of now, 4.9. By end of this month, try to complete in 4.8 hours. If you achieve that, then I'll ask you to complete within 4.7. There is no visible end. As long as we are able to maintain the quality, improve the speed, we are happy. Cost control talks about past and present. Cost reduction talks about present and future. In cost control, we believe that whatever is happening, the existing setup, this will continue. The infrastructure will not change. That means the machine, the technology, the tools, the equipments we use, this is all that we have. And with given set of resources, 5 hours is your target. This is cost control. In cost reduction, when an employee comes, you will ask him, boss, you have come from some other company. If you have any new idea, tell us. Do you want to change our way of doing things? All our employees are taking 5 hours. Is there any better way of doing it in less than 5 hours? Come to us with some ideas. And if you have experience gained from other company where you worked before, please tell us, do you want us to change the tools? Do you want us to bring in some new feature to the machine? We are ready to do. That means in cost reduction, because we focus on continuous improvement, we are ready to make investment on changing the infrastructure of our factory also. But in cost control, we say existing system will remain as it is. Everybody is taking 5 hours. You should be well within 5 hours. That's all. Understanding? So cost control is more like a preventive mechanism. As long as you're within 5 hours, I am okay. But here it is not just being happy that we are within 5. You continue to expect the employees to perform better and better and better. So when you're writing the answer, Do not write cost control, cost reduction everywhere. You should know where to write control and where to write reduction. Okay, they can even ask this itself as a theory question. Is there a difference between cost control and cost reduction? Whatever I told you in last 5 minutes, you can just prepare a table, left hand side and right hand side. Yes, steps in implementing target cost. Customer, product design specification, market, target price, profitability, target profit margin. So first understand what customer wants, then understand what is his willingness to pay, how much is he ready to pay. Third, set your profit margin. Now you know what is the balancing figure, the target cost, then compare that with current cost and see how much you have to reduce and identify cost reduction opportunity. This para mark this important, the whole table here, mark it important. They can ask you any question on target costing. They may say a newly formed company is planning to implement target costing practices in their factory. Explain them what is the procedure, and they may give some data also. So first you have to explain this theory, what is target costing, what are the steps, and then use the given data in the question. That is the number of units into selling price minus the profit margin, cost, current cost, and then the difference. You explain based on that. So don't directly start with the numbers. First explain all these 8 points. Very easy to answer, very easy to remember also. Let me repeat. Find out what customer wants. Number 2, find out how much is ready to pay. Number 3, how much is the profit that you want to achieve. Number 4, how much should be the cost. Then compare your current cost. Then you'll get to know how much is the cost reduction that you have to do, and then bring in new ideas, new innovation, re-engineering techniques to ensure that you meet this target. Simple. And then continuously monitor whether you are able to further reduce the cost. Again, I use the word cost reduction because it's a continuous process. Be careful while writing cost control and cost reduction. What are the advantages if you follow target costing? Number 1, competitive advantage. How? When everyone is selling at 10 rupee, if you are also selling at 10, then only you can start your business. In today's competitive world, even if you keep 11 rupee, people won't come. First, keep it at 10, let everybody come. Automatically what happens? You will end up producing more. And when production goes up, you know very well, cost per unit comes down. Once cost per unit comes down, you can reduce the price to 9.5. You will still be able to achieve the same profit. Now you start gaining competitive advantage because others will still continue at 10, but you will be selling at 9.5. Second, real cost reduction. It will not be a one-time event. Forever, you will continue to do this. Innovation. Now that you have to reduce the cost, you have to come with new ideas. So innovation comes when there is a need to reduce the cost. Market-driven management. Your entire decisions are based on what customer wanted. Remember first 3 points. What he wants, how much is ready to pay, and how much profit you want. That means all of this is starting from what customer wants. So everything is based on external market. Other advantages. Now see, if they are giving you more marks, then only you write other advantages. Otherwise, you write only first 4. This is how you have to decide how much to write in exam. Question is only 2 marks advantages, then these 4 bullet points are enough. They are giving you 5 marks, then first write these 4 important advantages and then all other advantages. You will minimize or eliminate non-value added activity. Obviously, if you have to reduce the cost, first thing you will do is identify VA and NVA, value added and non-value added. Remove all the non-value added, only value added is left out. So you obviously would have saved a lot of money. Effective planning and usage of resources, customer or market driven approach, proactive approach to cost management. I told you, cost control is not proactive. Everyone is taking fires, you also take fire. There is no proactive thinking here. But in cost reduction, a new employee comes, new for you, but he is an experienced guy. He was working in some other company. The first thing you will ask him is, boss, which company did you work before? Okay, if you know any good ideas, techniques, please tell us. Correct? We are ready to take up new initiative. This is proactive way of managing the cost. Yeah, cost control is not proactive. You believe that existing system will continue, infrastructure will continue, system will remain same, but you have to complete the task in 5 hours. Yeah, so understand proactive approach. When they say they're talking about cost reduction, not cost control. Some of the demerits, time factor. See, when you say we have to reduce the cost by 5 lakh, within how many months is the biggest challenge? In my example, 9.5 versus 9, 50 paise per unit, 10 lakh units. It is easy to say we have to reduce it by so much, but by when? That is where the challenge is. 2 months, 3 months, 5 months, 6 months, 1 year. What if we are not able to achieve even after 1 year? This is where the problem comes. What if we say 3 months? Employees will say this is not possible. There is a resistance from employees. They say we can't increase our working speed. Suddenly in 2-3 months, we have been doing this work from 10 years. How do you expect us to do? Correct. So then you'll have to extend the time. Say 3 months is not possible, 6 months, 12 months. What if you are not able to achieve even after that? So it's a never-ending thing. Responsibility for cost reduction. Many people will not be ready. They say reduction of cost is impossible. We are already working at such a low cost. We can't go down below this. So the first answer that you get from employees when you bring in some cost reduction idea is a no, it's not possible. Yeah. Coordination. Because why coordination is important? Understand, if purchase manager wants to reduce his cost and show to the management that he has done cost reduction, he will start buying substandard quality material. He will show that he has achieved the target, but then that bad quality item will affect the production, and then you will have external failure. Customer will not be happy. So you need to have a coordination that the purchase manager should buy at low rate without compromising the quality. If you do that, then the production manager will go to the management and say, nothing wrong from my end, all because of purchase manager. Now within the organization, two managers will be fighting. You will go nowhere. In one place, you saved some cost, that is purchase. On the other side, you have too many complaints. So you need a coordinated effort for an overall cost reduction. Quality issue to cost management. Next one, role of cost accountant in target costing. What is that a cost accountant can do? Number one, you estimate the cost. Yeah, to compare that with the target cost, it is your job to first estimate. Then you give them a permissible cost range. See, in my example, 9.5 was our estimated cost, but 9 was our target cost. Now 9.5 can't come down to 9 that easily. Now we have to give them the next best option. Okay, we can't bring it down to 9, then at least try to make it somewhere between 9.2 and 9.4 for first 6 months. Then try 9.1 to 9.3. You give them a range which is acceptable. Now even the production manager will be open to discuss with you. If you directly say 9.5 to 9, it may look like 50 paisa, but that is more than 5%. 50 paise for 9 rupee is more than 50%. They will resist. No, it's not possible. Sorry, more than 5%. They will first say no to this. Therefore, you should allow them a range. 9.5 cannot come down to 9. Give them next best alternatives. Capital budgeting analysis. So you have to prepare next 3 years, 5 years project reports when you have to purchase new machine. You have to convince the management that look, by purchasing this machine, we will be saving the cost. And that is our target as per target costing. Now to save so much, is it worth buying such a big machine, a new machine, which will again involve a big capital cost. And there is opportunity cost when you invest huge money as well. Cost principle explanation, review of cost reduction target, and finally reviewing and the feedback. You set the target cost once on monthly basis or quarterly basis. You also see how much is the actual achievement, and then have a discussion with them. You need to get their feedback, because again, this will become a one-time affair. Most of the things, we have been discussing this in all the sessions, most of the new ideas that you bring in, there is all the chance that all these will just go as a one-time exercise. You say this month we have to reduce the cost, everybody will try. Reduce labor waste, material waste, machine breakdown, unnecessary power consumption. You ask every employee to do this month, they will take this seriously. 2, 3, 5, 6 months later, the seriousness gets diluted, and then you will never achieve your target. You may achieve only 1 month, but that's not what you want. Yeah. Next. Entities where target costing is used. Almost all the entities used as such. I've just given a list of all the companies. This is not so important. You can read it by yourself. This is assembly oriented industry, entity involving heavily with diversification. Quite simple. I will not spend time on this. Let's continue. Target costing in service sector. Why is it a separate discussion? Shouldn't it be simply target costing for all sectors? You need to understand, explanation is given here. Let me explain with an example. The biggest challenge in service sector is majority of their expenses are fixed in nature, and your target costing talks about bringing the cost down. And if you have fixed cost, bringing it down is not easy. Understand, any service industry example you take, bus transportation, cinema theater, okay, take cinema theater as an example. 99% of the expenses incurred by cinema theater are fixed in nature. They do not spend anything per person who is coming and watching a movie. In bus also, whether there are 30 passengers or 40 passengers, they don't spend anything extra because now there is 41 passengers today. So one extra passenger, so we will have more cost. No, you will not have. Think about it, a bus transportation company, 99% of their expenses are fixed in nature. And now in target costing, we say first set the final price minus the target profit. You will now know how much is the target cost. Compare that with actual cost. Now we have to reduce the cost. Where is the scope to reduce the cost? Because these are fixed in nature. Think about it, in a bus company, driver salary, conductor salary, diesel, grease, oil, repair, maintenance, toll charges, permit fee, licenses, depreciation, none of these can be reduced because these are all fixed in nature. A bus company will not spend even a single paise because there is one extra passenger. Maybe ticket printing cost 5-10 paise, maximum 1 rupee. They take 500 rupee from us for a ticket. 1 rupee is so negligible. Even if you consider 50 rupee as their profit, out of 450 rupee, 449 is fixed in nature. Only 1 rupee is the ticket printing. Now, how will you reduce this 449? It is not easy. Understand, in service costing, in service sector, reducing the cost is more challenging than in manufacturing. In manufacturing, there are so many activities. Majority of the activities are variable in nature, starting from buying raw material, to paying direct wages, to paying incentive, reducing wastage, material wastage, labor idle time. All of this you can control, you can reduce this because most of these are variable in nature. In a manufacturing entity, rent and some of the utility expenses, they remain fixed. And if you have some permanent staff, that cost will be fixed. Other than that, most of the items are variable in nature. And in our costing, we consider even direct labor cost as a variable cost. That means majority items are variable in nature. There is an easy scope to reduce, but in service industry, there is a very tight situation when you say you have to reduce the cost. You have to directly remove some employees. Now a bus needs one driver, one conductor. Where is the scope to remove? Whom will you remove? How will you remove? How is it even possible? So this is more challenging. All that you can do is, instead of trying to reduce the cost, you have to try and improve the sales. Now you'll start looking other way around. You can't reduce the cost that easily in service sector. Therefore, 45 passenger capacity, 35 is our normal utilization. Try to increase that 35, try to make it 38, 40, 41, 42. That is a better way to earn more profit than trying to reduce the cost, because cost reduction is more difficult in service sector. Yeah, the same story is explained here. You can read it after the session. Cost reduction plan steps: define the target, formulate a program, that is how to achieve the target, implement it, and definitely after that, control and review. Value engineering and value analysis. Mark this important. They can ask short note questions. They can ask theory questions on this. Hope you are marked. Yes. Value engineering. It is the application of value analysis to new product. Hence, it is more associated with target costing, as it seeks cost avoidance or cost reduction before production. It is more associated with new products. Value analysis is a scientific approach to cost reduction, which reviews the composition of a product and its production design so that modification and improvement can be made which do not reduce the value, functionality, quality of the product it is associated with existing products, whether you say value engineering or value analysis. One basic thing that you should understand is identify the value added and non-value added activities in the entire process flow, and then remove all the non-value added items, non-value added activity. That is the basic principle. Value analysis is used if it is an existing product. Value engineering is used because, understand the word value engineering. When will you engineer something? Something has to be made, created for a new product, obviously. Value analysis, the product is already there. Now you need to analyze which are the value added and which are the non-value added activity. In one of the previous sessions, I was explaining this delivery of pizza from the pizza shop to your place. As of now, a single delivery boy has to go from another customer's place to nearby Domino's, and from there he is coming. It is taking more time. Is it possible that you have an aggregator in between your house and the Domino's, that this guy will come half the way and then he will deliver the product? Because for the customer, all that he wants is, I placed order at 7 o'clock, it's already 8 o'clock, it has taken 1 hour, why did I not receive? They might be doing some non-value added activity. You don't bother, you don't worry about it. All that you ask is, boss, 7 o'clock I ordered, it's 8, I have not received anything yet. Correct? What Domino's should do is identify which are the non-value added activity. Why is it causing so much of delay? Reduce all of that, avoid all of that. First try to reduce, slowly you can avoid all of this, because immediately avoiding is not easy. You have made your system used to one way of working. You can't overnight change things. So first try to reduce, over a period of time completely avoid that. If it is a new product, then while setting up the process itself, you do value engineering, find out value added activity and non-value added activity. Non-value added activities, try not to start itself, because you're talking about a new product. If you don't start, customers will get used to that way of system from the day one itself. But once you start, later you realize it's a non-value added activity. Removing becomes challenging. You can, but it takes more time. Role of this, number 1, investigates into economic attributes of value, reduces cost through change in product design, specification, source of supply, emphasize on finding new ways of getting equal or better performance from a product at a low cost without affecting quality, function, and utility, systematically examines each product or component to ascertain its utility, cost-benefit ratio, and better substitute. The best product is one that will perform satisfactorily at a low cost. Yes. Aim of VA is to achieve target cost by, number 1, identifying improved product design that reduce the product's cost without sacrificing the utility. Number 2, eliminating unnecessary function. Unnecessary function is nothing but non-value added activity, which I told you already. VA in VA, I have already explained this. VA, if eliminated, this will reduce the value. Non-value added is, if eliminated, this will not reduce the value or utility to the customer. Very, very simple. By removing one step, will customer be unhappy with this? If the answer is yes, then this is adding some value to him. Otherwise, why will he be unhappy? But if you are thinking of removing one step, and when you ask the question, will customer be unhappy? If the answer is no, it doesn't matter to the customer, then understand it is not adding any value to the customer. It's a non-value added activity. Yes. Issues analyzed in VA and VE, it eliminates unnecessary functions, unnecessary quality issues, design minimization, product design to suit manufacturing process, substitution of parts, combination of steps. This is to, again, make things faster. You are doing step 3, step 4, step 5. Can you merge all of this in one integrated system? Can you do all the 3? If yes, that will save some time. That means you're shifting from a non-value added 3 steps to one value added activity. Knowledge sharing and search for better way of doing things. All right. Let's move on to the next chapter, relevant cost analysis. Though Mainly, you are going to get practical questions from this topic. To answer a practical question, you need to know theory. I repeat what I said. Majority questions from relevant costing is practical. But to be able to answer that, you should know how to theoretically explain. For example, there is a material which will be used in making a product. What should be the relevant cost? There is a realizable value, there is a book value, etc., etc. Which one will you take? That we'll discuss. But in exam, remember, any question in relevant costing, you cannot just write particulars and amount. The reasoning column, the column in between these two, is more important, and that reasoning is all explanation. That will not involve too many calculations. So if you are writing direct material A, which cost is relevant? Is the book value relevant? Replacement cost relevant? If you are thinking replacement cost is relevant, you have to explain, since this is most commonly used item, fast moving item, if this is used, it has to be immediately replaced. So replacement cost is relevant cost, and then you write the number. Therefore, though this is a practical topic from exam perspective, to be able to get full marks, you should know the explanation well. Many students try to write very less explanation. You will lose marks. If you write less explanation, you will lose marks. I'll tell you what many students are doing in relevant costing. Particulars, reason, and cost. Particulars, direct material A. Here, they need to write the explanation. Replacement cost is relevant. They write 10,000 rupee. Understood replacement cost is relevant. Why? That if you don't write, you're not going to get the marks. So the reasoning, the explanation is more important. It's okay if you think you're explaining a little more, but here please explain more. Don't write any shortcuts, any one word, one bullet point explanation, because they will give you 10 cost items and these are all 10 marks question most of the time. They will not give you mark for the rupee, they'll give you mark for the reasoning. Ensure that you write detailed reasoning. When you're revising, don't be lazy. Don't just write particulars and amount and check the answer. Don't be happy if it is matching. Ensure that you are able to write. And I want everybody to write and practice some problems on relevant costing. Somewhere, please make a note. When you're doing the revision of this topic, do not read. Write and check the answer. Yeah. And I am sure your particulars column will be correct. Amount column will also be correct. The reasoning column is where you will get to know that you are not writing sufficient, appropriate answers. You will have to practice more, especially the reasoning part. Write as much as possible. Okay, chalo. First one, relevance of material cost. Material, if it is already available, then how to analyze? If it is to be purchased, then how to analyze? If it is already available, check whether it is regularly used or whether it is rarely used. If it is regularly used, then current replacement cost is relevant, because if you're regularly using it, the moment you touch this, you have to replace it. That means replacement cost becomes relevant. Rarely used, that means you have bought it, say 2 years back. Yeah, rarely used, or in some of the books you might have seen slow moving stock, non-moving stock. That is nothing but rarely used. Here, if you don't use it for this product, what is the next best thing that you can do? You will sell it. And if you sell, what will you get? Net realizable value. That becomes the relevant cost. If it is to be purchased, then answer is straight simple. Go in the market and purchase. That means current purchase price being out of pocket, because you have to go and buy it. Simple. Note, material already available includes material under firm purchase orders, material that are in transit where the risk of property in material is already with the buyer. Generally, current replacement cost is equal to current purchase price, that is current market price. Replacement cost is nothing but ongoing market price most of the times. Sometimes if they give two different numbers, then you go by the relevant number. If there are alternatives for disposal of rarely used material, example, substitution or reuse or scrap, the highest opportunity cost should be considered relevant. Remember, wherever you have opportunity cost, you have to keep this in mind. Opportunity cost is the best benefit forgone. Suppose there are two possible usage of a material, but you are using it for a third activity, then the opportunity cost is best number out of the two. You have to go by the maximum. So they may give material B can be either used for something or can be used for something else. Both will have rupee value. You have to go by the higher amount. Simple basic thumb rule, opportunity cost is the best benefit foregone. So if you have more than one alternate opportunities, take the highest. If it is regularly used material and if there is a restricted supply, then the relevant cost is current purchase price plus indirect opportunity cost. Relevance of labor cost. See this. Again, labor already available to be engaged or appointed specifically. This is easy. Out of pocket cost, wage of new workers. Because you don't have them, you have to hire them temporarily. Whatever you have to pay, that becomes relevant cost. You already have labor. This is an important part. Now you have to see labor cost in respect of future contract. Labor cost is variable and hence relevant. Now this is a general assumption, need not be same everywhere. You have to read the question. Sometimes company says that employees are available, they are permanent in nature and their salary is fixed. Now permanent in nature, you can't remove them, their salary is fixed. That means if you use them for a particular product, there is no extra cost. In that case, relevant cost is nil. Correct? See here, excessive labor force and company has no retrenchment policy or reduction in idle time, labor cost is committed cost, hence irrelevant. Anyway, you have to pay. But if there is a shortage of labor, this is very important. When will you have shortage of labor? Sir, we need some people. We have people, but they're doing something else. That means there is some contribution that you have to sacrifice because they're already doing something. Variable cost plus opportunity cost. Variable cost is the salary that you pay to them plus the opportunity cost. Contribution foregone becomes irrelevant. Contribution foregone is the opportunity cost. They are doing something. They are busy. Now you want them to stop that work and come here. Now when they come to this product, you have to first pay them variable cost plus they have to sacrifice company has to sacrifice the contribution that they would otherwise generate because of the other activity. So it is salary that you pay plus the sacrificed contribution. Note, if acceptance of special contract necessitates replacement or transfer of workers, that is from existing job carried out with new workers, and existing workers are transferred to the special contract, the wage of new worker is relevant for the special contract. Let me explain with an example. Company is doing something, some work, all the labor are fully occupied. Now a new contract has come. For new contract, you are shifting, transferring some of the busy employees from here to there. Correct? Now the relevant cost is this opportunity cost. The wage of the new worker is relevant because you have transferred them from your regular business to a special contract. Relevance of all other costs one by one. Variable overhead. Irrelevant if it is already incurred. Relevant only if such cost is to be incurred in future. If you understand these two bullet points, one thing is clear. Any historical cost which is paid in the past, and if it is sunk in nature, that is paid and it is not going to come back, that cost is irrelevant for decision making. Though it is variable overhead, if I have already incurred, it is irrelevant. Normally, what is the general understanding of students? All fixed cost irrelevant, all variable cost relevant. But don't jump into conclusion. Though it is a variable cost, check. We have already paid. Can't do anything. It is irrelevant. Are we going to pay in future? Then it is relevant. Fixed overhead relevant only under specific situation described in the question. That means if they say that this fixed cost is additionally incurred for example, depreciation, using the machine for this particular work, the depreciation would increase. Now fixed cost is incremental fixed cost. It is not a fixed one straight line. There is an incremental fixed cost because you are using that machine for a special contract. The depreciation is expected to go up. Repair, maintenance cost may go up, though it is a fixed cost in nature. Because it is incremental, you will have to consider it. Depreciation irrelevant as it is an apportionment of historical cost. I told you the regular depreciation is irrelevant, but if it is increasing because you are using it for a project, it becomes relevant. So go by a simple rule. Fixed costs by default are irrelevant in nature. But if there is an increment in the fixed cost because of the particular activity you're planning to do, then the incremental fixed cost becomes relevant in nature. Other expenses, irrelevant if already incurred or just apportioned. Relevant if they are to be incurred specifically for a contract. Now, what is this apportioned cost? Suppose there are 5 departments. Total rent is 10,000 rupee. You will apportion 10,000 rupee on the basis of area. Now, this contract, the new customer's contract, will be done in one of the departments. Now, should I consider apportioned rent as a relevant cost? The answer is no. Because whether you take up this contract or you don't take up this contract, the rent is not going to change. The total rent is 10,000. That will remain same. 10,000 was apportioned between 5 departments in the ratio of area. Your department was charged 2,000. Tomorrow you do that work, you don't share fixed cost. Only specifically incurred fixed cost matters. The general fixed cost which is getting shared using some ratio, that is irrelevant in nature. Intra-company transfer price charges for services, incremental cost up to the point of transfer plus opportunity cost are relevant. If you are making one product in department 1 and that is transferred to department 2, and in department 2 you are doing the main product which is required by the customer, then you have to consider incremental cost up to the point of transfer, that means variable cost plus opportunity cost. Instead of giving it to department 2, if they had sold it outside, they would have made some profit. That profit forgone should also be added here. Next, some other points. Fixed cost, it becomes relevant for decision making when fixed costs are specific. It is not fined, it is fixed. Fixed costs are specifically incurred for any contract. For this, you have to read question carefully. Everybody, very, very important. Don't jump into conclusion the moment you see the word 25,000 fixed cost. Please read in detail. If you are incurring specifically for the product, whether it is fixed cost or variable cost, it is relevant. Simple. Fixed costs are incremental in nature. I told you, generally, this cost is 10,000. It is fixed in nature. But if you take up the project, it will go up by 2,000. The 2,000, that is incremental fixed cost, is relevant in nature. Fixed portion of semi-variable cost increases due to change in the level of activity consequent to acceptance of contract. Now, in semi-variable cost or stepladder cost, you will have some adjustments like this. Up to 70% activity, fixed cost is 5 cost is 5 rupee per hour. 5 at 70% capacity. Cost will be 5 rupee per hour only, but the fixed cost will become 5.5 lakh. As of now, you are working at say 68% capacity. A new customer contract has come, and that will take 5% of your capacity. So 68 plus 5, you will be at 73% capacity. Now, once you cross 70%, there will be additional 0.5 lakh. This becomes relevant. That is what they have given here. See, fixed portion of semi-variable cost, which increases due to change in the level of activity from 70. The moment you go beyond 70, 75, 73, 78, you are increasing the fixed cost portion from 5 to 5.5. The 0.5 becomes relevant. Next one. When will fixed cost become relevant? Fourth point, fixed costs are avoidable or discretionary. They say you may spend, you may not spend, up to you. and we decided to spend, that becomes relevant. Discretionary. What is the meaning of discretionary cost? The cost that can be spent or can be avoided. This is at the discretion of the management. If they want, they can spend. If they want to avoid, they can do that as well. Fixed costs are such that one cost is incurred in lieu of another. The difference in the cost will be relevant for decision making. They said, look, you can do either this or this. Option A or option B. If you go by option B, you'll end up spending 20,000 extra. Then take 20,000 extra cost as a relevant cost. Next, another area which is a bit confusing to many students, opportunity cost. What should I keep in mind? Opportunity cost is a relevant cost where alternatives are available. It involves choice and decision making out of many alternatives. That means very basic principle. Opportunity cost will not come into picture when I don't have too many options with me. For example, I am sitting idle. I have no job. Somebody comes and says, there is a work, I'll pay you 100 rupees per hour. Will you do? For me, there is no opportunity cost because I don't have any other choice. Opportunity cost comes into picture only when there is a choice, correct? That is why when we discuss the labor, they said labor is already occupied, they are busy. That means if you want that labor to stop that work and come here, then you talk about opportunity cost because they're already doing something. If labor is sitting free and you're taking their service, where is the question of opportunity cost? First, there should be an alternate opportunity. No opportunity cost. Simple. Second, opportunity cost is generally evaluated for short-term purpose. Understand, opportunity cost is not a permanent cost. As of now, he is busy. I am using him for next 5 years. So for 5 years, you calculate opportunity cost. That doesn't mean whenever you use that employee, you have to consider that opportunity cost. Today he is busy, you're stopping one work, you're using him in another work, there is opportunity cost. Tomorrow that employee may be free. So don't tag any specific opportunity cost to any specific employee or any specific machine. Not every employee, not every machine is busy forever. Opportunity cost is for short-term purpose only. Opportunity cost is not useful for accounting, reporting, and cost control. It does not find any place in formal accounting and is computed only for comparison purpose. There is no journal entry for opportunity cost. You can't record opportunity cost. Understand this. Why? Because to pass a journal entry, you need to have dual concept. There is a debit, there has to be a credit. When I say we are losing an opportunity, okay, you are losing. Who is gaining it? Are you paying anything from the pocket? Is there a cash outflow? No, I am losing. No one is gaining. Understand, I'm attending a class, I have to sacrifice sleep. Okay, you are sacrificing the sleep. Is there someone getting benefited because you're sacrificing sleep? No, nobody. Only I am losing. There is only one side to the entry. There is no other side. For anything to go to books of accounts in accounting, you need a debit and a credit, dual aspect. Where is dual aspect here? There is only one angle. Therefore, you cannot record opportunity cost in books of accounts. Opportunity cost arises only in case of restriction of resources. That is key factor situation. I told you, when I am busy, I'll think about opportunity cost. When I am free, where is opportunity cost? If resources is abundantly available, I told you I am fully free. Where is the question? They can be used for pursuing all available alternatives, courses of or action. When number of alternatives are available, mark this, very important, highest of the opportunity cost will be considered for decision making. There is a raw material A, you are using that. That raw material A can be used for product K, product J. You are doing product P. Now, if I use it in product K, how much is the contribution? If I use it in J, how much is the contribution? Take the highest one as the opportunity cost if you are using that material for this particular product. If there are two opportunity costs, remember, it is the best benefit foregone. I know I'm repeating this again and again because this is very, very important. One opportunity cost you will easily answer. 2-3 options you have to evaluate and you have to show this in detail in a working note. You have to explain that, look, this material could have been used for option 1, option 2, option 3. Opportunity cost is the best benefit foregone. Therefore, I have taken highest among the top 3. This you need to explain in a detailed working note. If you can't answer this in the main table, particulars, explanation, and rupee value, you write working note 1, and then later in working note, you explain this. Next is opportunity gain. Just like opportunity cost, there can be opportunity gain as well. Opportunity gain is equal to incidental indirect benefit derived out of choosing a particular course of action from among various options and comprise A, there should be either saving in cost or there should be some benefit derived by accepting or choosing a certain option. So just like how abnormal loss is added, you consider opportunity cost is added, you consider it as a cost. If there is an opportunity gain, you have to reduce it from the total cost. So material, labor, all the expenses, and if there is an abnormal gain, then you reduce that, and that becomes your total relevant cost. For that, you can add profit and fix the price. One more important thing, which is not printed in the handout here. Any relevant costing problem, you may not do total cost calculation and add 10% or 15% as profit. Most of the time, the question will be, what is the minimum price? Now, minimum price is equal to total relevant cost. If total relevant cost is 100 rupee, then understand the minimum price is 100. If somebody is ready to give me 100.5 also, I am happy to sell. I will not consider 100 plus something, 10% I always want. No. In every relevant cost problem, understand they ask you minimum price, and minimum price is total relevant cost plus any nominal profit above that. You will be happy to accept that order. Yes. All right. So with this, we are done with relevant cost analysis. This is an important chapter from exam point of view. In some books, relevant costing is part of CVP analysis and decision making itself. Okay, and in some books, CVP is separate topic and relevant costing is separate topic. Though it is part of CVP in majority books, in all the exams, there are questions on decision making also and the relevant costing also. So I suggest you study this as an independent topic. Even though you're studying CVP analysis separately, this also should be studied separately. Don't read it like part of that topic. Give little more importance. Consider this as a separate topic. Even if you're referring to a book where it is part of CVP analysis, I suggest do relevant costing little more detailed than what it is printed there. Okay. Yes. So that is about the discussion of important topics I had planned for this session. We will meet in the next session. We will discuss a lot more lot more concepts, and also we will discuss the RTP questions. Yeah. So thank you so much. I'll be closing this session. We will meet in the next session.